We not record?
This is the June Audit Committee meeting with the main agendas going through the financial statements, which will be presented by KPMG. I believe, Lisa, we are short one Audit Committee member. So you have agreed to fill in for us. Okay. The first agenda item is approval of the minutes of the last meeting. Could I have a motion to approve the minutes? Al, Lisa?
So moved.
Second?
Second.
I'll second. Okay, Al, thank you. The minutes have been approved. Thank you. The next item, I'm going to turn it over to Kim, and Kim is going to introduce our KPMG, and we're going to have a review of the basic financial statements for DASNY.
Thank you, Joan.
You're welcome.
Good morning, everyone. Before we move into the details, I'll give a quick summary of the highlights of this year's audit results. KPMG expects to issue 3 unmodified opinions on DASNY's financials, the supplementary information included with the financials, and DASNY's compliance with the state controller's investment guidelines and DASNY's investment policy and guidelines. KPMG did not identify.
So is it premature to say congratulations?
It's not
premature, no.
It's not.
Good work, Kimberly.
KPMG did not identify any significant deficiencies or material weaknesses in our internal controls. Therefore, they won't be. Unless there's questions, I'll now turn it over to KPMG to review the required communications. You have the presentation.
Okay. Oh, nice.
Good afternoon or good morning, everyone. I guess I'm too familiar with doing this in the afternoon and then the morning as far as that goes. So as Kim mentioned, my name is Jeff Koch. I've been the managing director. I've been on the account in the lead role now for the last 2 years, but several prior years on that in various roles. I'm happy to be returning. I'm joined here to my right by Ryan Kenyon, our senior manager, who's been on the account now for 3 years. We've provided drafts of the various documentation, but we'll be primarily going through our presentation that we kind of presented to y'all. Clicker's not working.
I was going manual.
Do manual mode. So we'll move into slide 2.
That's it.
So on slide 2 is and this is just kind of a summary of a KPMG audit and kind of what we value as part of our overall audit. Delivering a better audit experience is what drives KPMG as a firm, and there's 4 pillars that we kind of build that off of. The first being the quality of our audits. Over the last several years, we've made significant investments in the technologies and tools that we've kind of implemented and rolled out at a lot of our clients to not just audit, but really focus on where the risk is and ensure that we're providing an opinion that's reputable in the industry as far as that goes. We bring you to an experience that has a lot of experience working in various state and local government clients, as well as the back-end resources we have, whether it be our actuarial resources or our Department of Professional Practice should an accounting matter arise. Those resources are always available to DASNY as part of a KPMG audit. We talked about productivity. Again, that's a lot to do with the tools we've implemented the last 3 years, our KCW, our Clara workflow tool that helps us move efficiently through an audit. And we've continued to find different ways to implement things such as, Alteryx to kind of help be efficient with our overall audit approach. And then we also bring insights. Given our vast reach as a national audit firm, we do have an opportunity to see what's going on in different industries and different spectrums and do provide some of that information as we kind of go through it all.
We maybe reload. You guys are flipping through slides. We're still on the cover sheet.
Yep. Oh, that's what we're trying to work through here. Oh,
There we go.
Did I get it?
Thank you.
Perfect. Got it now. Got to push it harder. So, all right. So on our next slide here is just our overall audit results slide. As of today, there are no outstanding matters. We'll work on the finalization with the approvals of getting the final representation letters and all that. As Kim alluded to, related to our audited report, we expect to issue an unmodified opinion That's a clean opinion and the highest opinion that an auditor can issue related to the financial statements that will be issued. In related to the audit, there were a couple of uncorrected and corrected misstatements. We'll talk a little bit about those as we go through. Both were considered immaterial, both individually and in the aggregate to the financial statements. So again, nothing that delayed us or changed our overall opinion on these financial statements. In addition, there were no significant deficiencies or material weaknesses identified in the internal controls. That's going to be reflected when we do issue the report on the internal controls over financial reporting and compliance with other matters based on an audit of financial statements in accordance with government auditing standards, easily referred to as the Yellow Book report. That'll document that anything was identified. It's worth noting as well, as we talked about in the plan, and we don't design our audit approach to test controls. We test controls in areas where we need to reduce the overall audit risk. If we can do a substantive approach alone, that's the route we go, which is what is required with a private entity kind of audit. The other two reports that we will be issuing, there's one over the supplementary information, which will be issuing in relation to opinion. That will be a clean, unmodified opinion as well too. And the last report is the report over the investment compliance in accordance with section 201.3 of Title II of the official compilation of code, rules, and regulations of the state of New York. And again, that will be an unmodified opinion. I'm going to flip to slide 5. This is a summary of the required audited communications. We will not go through everything on here. There are some information that we'll kind of touch as we go through the rest of the presentation. I think one thing important to point out here is that when we did meet back in October and present our overall audit plan, we didn't have any revisions to that plan. So we followed through with that plan. Nothing came up that required us to change our approach. Again, no issues, no concerns. Other matters that we have to talk about related to illegal acts or fraud. As part of our audit, we do design procedures to kind of look at this. We didn't identify any actual or suspected fraud involving management employees with significant roles in the DASNY system of internal controls, or where fraud results in a material misstatement in the financial statements. We did obtain some written documentation, which would be the engagement letters, as well as we'll be obtaining the management representation letters. Independence is important of your independent auditors, and we do evaluate that at the beginning and throughout the audit up until we do issue. I'm happy to report that as of today, we are independent with respect to DASNY as defined by the professional standards. And lastly, we have done all of our inquiries up to date. There is a little slide later on in the presentation around page 15. We won't go through that, but just kind of it's a memory jogger of type of inquiries that we do ask as part of a financial statement audit. The one thing I just want to highlight here that's not on this slide is, as well as all this, we also obtained the full cooperation of management. Management was transparent. They were deeply engaged and involved, and really helpful in ensuring that we got the audit issued on a timely basis. There were no disagreements as we kind of went through the audit. As I alluded to before, there were a couple of misstatements as part of the financial audit. The first is the non-GAAP policy that DASNY's had from prior years. This is where GAAP requires that you accrue up until the end of your issue in financial statements any items that may arise that related to the prior fiscal year. From an expense standpoint, if it was a prior year expense, it should be accrued in these financial statements. Given the time of getting through the financial statements, management has a policy that they look at everything up and through June 1st. And once the June 1st date hits, they kind of just analyze to say, is there anything significant that we should record? We do an analysis of that. We continue to run our procedures through the issuance of our financial report and identify any other items that may be material to the financial statements. That results in what's called an audit misstatement because it's above our reporting threshold that we have to communicate to the audit committee here, but it doesn't mean it's material to the financial statements. And we're happy to conclude that while there was that same non-GAAP policy consistent with the past, it was not material to these financial statements. The second item was a corrected audit misstatement, and it related to how management was recording the financing income for some of the state issuances. The state continues to prepay some of those, and there's been challenges related to how to record that in the financial statements to be the most efficient and effective way without having to record items and then reverse them as decisions were made how that funding would be spent. As part of that process, there was an amount that was unrecorded as part of the current year. Management reviewed that, they booked that entry, and ultimately corrected these financial statements. But again, because it's above our threshold, we do have to communicate that today. Other than that, there are no other significant matters that we have to communicate. This is the last slide, then I'll let Ryan go into some details here on the auditor's report. Again, we'll be issuing an unmodified opinion. We are required to note that, consistent with prior years, there will be additional language in that. That's called an other matters paragraph, which relates to the required supplementary information paragraph. There are certain things such as your management discussion and analysis that has to be included in the financial statements that the opinion covers as well too. We review that information and ensure there's nothing that's inconsistent with these financial statements. The last thing I'll cover on here is that, while we issue these reports here today, we will be working with management throughout the summer as we work to finalize the remaining 12 individual financial statements. Those are already in progress and we shouldn't have any issues or delays getting those done fairly soon. With that, I'm going to turn it over to Ryan to go through some of the significant areas.
Thanks, Jeff. So for significant accounting policies and practices, these are described in note 2 of the financial statements. They're performed in conformity with US GAAP and the governmental auditing standards, and there's been no significant changes from prior year related to these, and no transactions that lacked authoritative guidance. The next one. So for a little summary of the audit results, we always have the presumed risk of management override, just related to management's unique position as close to the financial reporting process. So in order to address that, we perform inquiries, review manual journal entries, and to validate the business purpose of journal entries. And we also review accounting estimates, and we introduce and incorporate elements of unpredictability in our audit statements. Next one, so significant accounting estimates. For the first one, OPEB liability, there have been no changes in the methodology in 2024. No indicators of unusual or inappropriate management bias during our review. And overall, we were able to determine that the key assumptions, methods, and data appear reasonable and in conformity with GASB number 75. Similarly, for fair value investments, there have been no changes to this methodology during the current year. No indicators of unusual or inappropriate management bias. And again, we were able to conclude that all the key assumptions, methodologies, and data points here are also consistent with last year and in conformity with GASB number 72. Now, the next one, for significant financial statement disclosures, we have the note 7D for conduit debt. Again, similar to prior year, we sent out independent third-party confirms. We vouched the responses to all the underlying documentation, and we did not identify matters, exceptions, or issues or anything like that related to that disclosure. Moving to other information for the management's discussion analysis. While we don't offer or issue an opinion specifically over this, we still have the duty to determine that it's materially consistent with the basic financial statements. And we did not identify any inconsistencies, issues, or exceptions or anything like that related to the MDA. And similarly, for the required supplementary information, that's performed in accordance with the generally accepted auditing standards. And we perform limited procedures over this, including inquiries, tie-outs. And again, there were no exceptions, inconsistencies, or anything like that that we identified. That will pass it to Jeff for the inquiries.
So as I mentioned earlier on, this is just a slide. It's more of kind of informational of some of the type of questions we do ask as we go through our inquiries with management throughout the process. And nothing came to our attention of concern. Management had high regards for the overall organization, and nothing that arose during the audit that would lead us to believe something different. The remainder of the presentation is just an appendix of various information for your reading pleasure. We've included in here one of the items being a what's on board audit committee agendas for 2024. Again, it's geared towards both private and public companies, but we do include it because it's a good item to look at and to determine if there's anything that DASNY should be thinking about as they kind of go through the fiscal year. So with that, that does conclude what we had prepared. We will open it up if there are any questions.
Very thorough, thank you.
Thank you, KPMG. I also want to congratulate you and the DASNY staff. This is Herculean to try to get this done within the timeframes that are required. And for folks that don't know, this is required to be submitted to the Controller's Office for the consolidated financial statements that are due in August by next week. And you've done it again. It's a big job, and we certainly appreciate all your effort on both sides. Thank you.
All while Kim is implementing a big new financial system. So I don't know what you're gonna do with your spare time, Kim, but.
I know, that's what I say to my staff all the time. We gotta find something else to go through.
Really great job, KPMG and Kim and your team.
Thank you. Before we move on, I will provide some highlights of the financial statements. Turning to the financial statements included in the audit committee tab of the materials, I'll just review more significant items that were included in this year's financial statements and provide you with highlights of DASNY's financial results for the year. Beginning with the executive summary on pages 6 and 7, highlights of our business included a strong year for our debt issuance activities, issuing approximately $8 billion in debt, comprised of $6 billion on behalf of state institutions and $2 billion in conduit debt borrowings. On the construction management side, we completed work at the Lehman College School of Nursing and SUNY New Paltz Washington Hall, while continuing work on the new academic building on the campus of FIT and work at Western New York Psych Center. Additionally, work got underway at the New York State Life Sciences Public Health Lab and the Mid-Hudson Forensic Hospital. Turning to our financial results, overall, the financial statements reflect an increase in our net financial position of $81 million, the majority of which is activity in our restricted funds. DASNY's operations showed a surplus of $1.9 million, which reflects a surplus of $1 million on the public side and $900,000 on the private institution side, primarily due to a $1 million surplus for financing and bond administration and a credit or reduced allocation of OPEB expense due to improved discount rates. In terms of debt issuance, as discussed on pages 9 and 10, we issued approximately $6 billion in debt on behalf of state institutions. Approximately 83% of that came from new money and refundings. In terms of distribution, and as shown in the chart, nearly 2/3 of issuances, 64%, was on behalf of New York State agencies. On pages 12 to 14, you'll see we had $5.7 billion in bond retirements for the year. Approximately 53% came from defeasances and early redemptions, and 37% from bonds that were refunded by new DASNY bonds. The majority of defeasances and early redemptions were as a result of prepayments provided by the state at the end of 2023. Moving to pages 14 to 16, we ended the year with $56 billion in outstanding bonds, a slight increase of $1.4 billion from 2023. The split between state institution and conduit bonds remained at 61% and 39% respectively. In terms of our construction management line of business, on pages 17 through 19, our total construction and loan disbursements decreased approximately $41 million in 2024. Certified disbursements drove the decrease with $178 million in fewer disbursement requests, primarily in the SUNY program. DASNY managed project disbursements saw an increase of $129 million, primarily related to New York State agencies, including grant disbursements and SCSC disbursements related to the cannabis program. Turning to page 21, DASNY's statement of net position increased $81 million in 2024 compared to 23, primarily due to an increase in restricted net position related to state prepayments. Increases of approximately $2.2 billion in assets and liabilities were largely driven by the net increase in bonds outstanding, the related loans receivable, and cash equivalents. Net investment in capital assets decreased $2 million, primarily due to the depreciation of capital assets and amortization of right-to-use lease assets and subscription IT assets. On page 22, you can see the total investment balance of $5.7 billion reflects a decrease of approximately $636 million, primarily due to increased holdings in money market mutual funds, which is a component of cash equivalents, offset by new money bond issuance activity, net of disbursements for construction projects and grant programs. Additionally, money market funds saw a $2.1 billion increase from the prior year, largely due to the prepayment of debt service by the state. DASNY's total investment portfolio has increased to approximately $8.1 billion. Also included within your materials, we have the supplementary information that is provided with the financials. Those include the schedules that break out our financial statements by program type and DASNY's operations, DASNY's budget and actual expenses for its operations, and a schedule of outstanding bonds and notes. We are required to submit the auditor's report and basic financial statements to the Office of the State Comptroller by June 30th. And during today's board meeting, there will be a resolution for the board to approve adoption of the basic financial statements as of and for the year ended March 31, 2024. Before I conclude, I want to take a moment to thank the people that made the receipt of these results possible. In addition to the usual tight deadlines related to the audit, staff have been working, as many have mentioned, working on a replacement of our current financial management system. They have been working diligently towards an implementation for the beginning of next fiscal year on 4/1/25. Once again, I've been able to rely heavily on the experience, knowledge, and dedication of the finance staff to maintain our books and records accurately, to provide the necessary support to our independent auditors to ensure we continue to receive unmodified opinions, and to ensure that our financial statements are filed with the state in a timely manner. In particular, I want to give a special acknowledgement to Diane Temple, who's sitting here next to me, our Assistant Director of Accounting, who recently joined DASNY in September, so she had a short period to get up to speed and jump in and oversee this year's audit. She did a great job. Throughout the audit, in addition to our team, Diane had the support of Stephen Winters-Bona, the Assistant Director in the Debt Unit, Stanley Reed, the Assistant Director of Investments, Jeff Arnold, the Director of Budget and Operations, Kelly Ray, the Assistant Director of Accounts Payable, and Tanette Tomlin, Senior Financial Analyst, and their respective teams. Without their dedication and oversight, today's results would not be possible. I also want to thank Mamadou Berry from our internal audit team who supported KPMG during the audit process. And lastly, thank KPMG for their support and role in making the audit run smoothly. Thank you.
Thank you, Kim. Again, kudos to you and all the staff at DASNY, and thank you to KPMG for their diligent effort. I'd like to call for a motion of the committee to recommend to the board the Dormitory Authority basic financial statements as of and for the year ended March 31st, 2024. Could I have a motion or motion to approve? Thank you, Lisa. Second?
Second.
You, Al? All approve? All approve. Thank you. I want to now turn it over to Kim to talk about the annual investment report.
Thank you, Joan. The next report is the annual investment report, which DASNY is also required to file with the Office of the State Comptroller. The report includes our investment policy and guidelines and summaries of investment income earned and fees paid for the year. A copy of DASNY's financial statements will also be filed with the report. There were no changes to our investment guidelines during the year. Investment income totaled $274 million for the year, $4.4 million of which was earned from construction funds, with the remaining $270 million from all other funds. An additional $72.5 million was earned on the investment of conduit debt-related bond and note issue proceeds, along with the reinvestment of existing funds related to conduit debt, which is not reported in our basic financial statements. During 2024, DASNY paid approximately $994,000 for trustee and custodial fees. That concludes my presentation of the annual investment report.
Thank you, Kim. Any questions from the committee, from the board? Okay, I'd like to, a motion to recommend to the board the approval of the annual investment report for the year ending March 31st, 2024. May I have a motion?
So moved.
Al, thank you. Lisa? Oh. Thank you, Lisa.
Al,
Thank you. I now want to turn it over to not Kim, but Robert for a review of the Public Authorities Accountability Act annual report.
Yes. So the report will be provided to the members, contains information regarding our bond sales and construction report information for members to review.
Do I do a motion on that? May I have a motion to approve a review and approval of the Public Authorities Accountability Act annual report? Lisa, thank you. Second?
Second.
Al, thank you. All in favor? Aye. That is approved. So at this point, I'd like to request that we go into executive session. May I please have a motion? Let me read this so I get it right. To go into executive session to discuss the financial history of a particular corporation and matters leading to the appointment, employment, motion, promotion, demotion, discipline, suspension, dismissal, or removal of a particular person or corporation. May I have a motion?
So moved.
Second.
Thank you. Al, thank you. All in favor?
Aye.
Thank you. We have just concluded the executive session for the audit committee. No action was taken in the executive other than to return to the public session, excuse me. Can I make a motion to adjourn the audit committee? So thank you. Second?
Second,
Okay, thank you, Al. All in favor?
aye.
The audit committee meeting has been adjourned.